Iran's foreign minister, before leaving Oslo, says that we're preparing for Sunday's discussions with the US in Muscat.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and wholesale Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all, of which can adversely affect actual trading results.
So if we do have a different video, we'll get that out on the feed for you. So a new video has been posted out for you on the feed for you to watch. Besson speaking.
Stop field.
INQ 352 contracts. Gold Ice Iceberg Sell GC 179 contracts. Prior GC disqualified.
Just keeping an eye on the S&P 500, seeing movement towards further movement towards the upside here. No indication of any headline related to the move. If there is, we'll relay that to you as soon as we can. Just a little bit of a move towards the upside. 10 minutes away from the bottom of the hour, we get the data. 10 minutes away from the bottom of the hour, we get the natural gas data. Forecast is for a build of 108 BCF. Prior was a build of 122 BCF. Canada's PM Carney sees progress in trade talks between the US and Canada. Canada's PM Carney sees progress in trade talks between the US and Canada. Undersecretary for the US, Kessler, says more funding would boost US export control enforcement. There's Undersecretary of Commerce Jeffrey Kessler addressing lawmakers.
And Q long validated.
5 minutes to go now till we get the EI natural gas change data. Forecast is for a build of 108 BCF. Prior was a build of 122 BCF.
NQ long retested. GEXy long validated.
Besant says business chiefs tell me capex is ready to go post tax cut. Post tax act. Just keeping an eye on Oracle shares extending rally to nearly 14%, reaching all-time high. S&P 500 and Nasdaq turn higher.
GEXy long retested.
NATO to boost missile defenses in East to deter Russia. Kessler projects Huawei Ascend chip output below 200,000 in 2025. So 1 minute to go to the EI natural gas data. Ten seconds. build of 109 BCF, a build of 109 BCF compared to the expected build of 108 BCF.
Nat gas iceberg sell NG 152 contracts.
I have posted out the EI natural gas report for you in the Financials newsfeed for you to read through. So US natural gas futures pairing gains up by about 1.9% now after the EI reports storage build.
Nat gas iceberg sell NG 178 contracts. Nat gas iceberg sell NG 162 contracts.
All right, could you guys hear me? I cannot believe I just talked for 35 minutes with no one hearing what I'm saying. All right, could you guys hear me? Okay, yeah. I cannot believe I just talked for... Oh my goodness gracious. Sorry guys, I just didn't see you. Everyone was telling me, why doesn't someone... Okay, Rob R., thanks for telling me, and Wizard, but you gotta tag me. Mark did earlier, but I thought it was just a... function. All right, just please next time on my trade room tag me because I didn't see. So I just sat there and talked for 35 minutes. You guys can hear me. Alrighty. Goodness gracious. Sorry, guys. I can't believe you stayed on this long. I would have said, see ya. Not that we missed anything, but I went over a lot of stuff and no one can hear a word I was saying. Great. So, guys, the other thing, too, if you can't hear me or something's wrong on YouTube, go over to the Bookmap Discord, right? So I'm pretty sure these guys can hear me because they didn't say anything. I'm not sure why it's not showing my camera, but not that you need to see me to watch me trade, but it's not working. But I'm assuming they can hear me. All right, sorry about that, guys. I don't really want to go over everything that I've done so far, but bottom line is, well, I've never done that. I've never talked that long without looking at the comments. Sorry. Anyway, I'm short here at Sexy GEXy and NASDAQ. So apologies to you Discord guys if I'm going to repeat a lot of what I just said because I've been talking for a half hour without anyone hearing me. Anyway, we have different strategies. I have different strategies that I take. Most of my strategies is I'm waiting for an ATR plus move out of the zone to enter the trade, and my stop goes on the other side. I cannot believe I have to say all this again. At least I have some coffee. So for the position trading strategies, that's what these are here. And again, I just made a course on these. So on these webinars, I'm trading live and I'm trading multiple strategies in multiple markets. So I'm talking fast, so it's probably very hard for you to understand what I'm talking about if you're first time on here. So I have position trading strategies that are looking for bigger moves. So all I'm doing is I'm looking for these stop iceberg events, which are the most powerful thing that I've seen in my trading career as far as an edge. And then I look for these. I have 6 distinct events for these stop iceberg events. This is the zone drawing tool that draws this information up here on the chart. I'm looking for these events in my important areas, right? Most of the trades I jump, I'll wait for the move out of the zone, ATR plus out of the zone to enter the trade, long or short. I have a few strategies that we've implemented recently where I'll jump in right in the middle of the zone, kind of like I did in this one, and it's about to stop me out finally, which is fine, put me out of my misery here. And you can see what I've been talking about this whole time. So I put on a trade right on the open. Good thing you didn't have to hear this, so maybe you didn't do it, which is good. I put on a hot knife through butter trade. I got filled with a tick, and then Beston started speaking, and I got blown out of the trade, right? So what I did do off of this event, this is a bullish event, this is a bark, that's what I was showing when you guys couldn't hear me. This is the pattern for the bark. A bark is just looking for this event anywhere because the edge is inherent in the event. So most of my trading strategies are looking for this information in important areas. Well, I still want to trade the event because it's an important area. It's traders loaded up. So to take a trade off of here, which I just went long, by the way, NASDAQ, I went ATR retest. We have a trade for that. That's called a reversion trade. I'll get into that, even though I just talked about it for a half hour. ATR retest confirm. That's what BARK is. So B stands for blind. A stands for the ATR, the current ATR, which is about 27. Right? 5-minute ATR means it's rotating 27 points every 5 minutes. Very, very important to know the volatility in the market and the volume of the market, the volume events. So blind, meaning it can happen anywhere. ATR, the R in BARK stands for retest, and then confirm means a move back out. That's the pattern I demand for that trade. The other thing I demand is that algo guy. Again, I went over all this too while you guys were listening to mute. This guy, this is just an exponential moving average. This needs to be in the direction of the BARK trades, BARK and Lick trades, for me to take the trade. It's just an additional filter that helps because we call this algo guy for a reason. There's so many algos that trade off of this, right? They trade when it moves back into the red. The red ribbons are just different time periods, longer term time periods. They trade when it comes back in there, they fade it, right? And then when it crosses, the blue crosses the shorter term, crosses the longer term, they jump on that way too. So I demand that in the direction of my trade, which I have here. So what I was saying for this whole time, I was complaining I got blown out of that Russell short because I put it on right when Besson started speaking. Like, that's been the function of these markets for the last 5 months, right? It's the most difficult trade I've ever seen in my career as far as markets just spin in place until someone says something and then they rip off the page. And unless you can make algos that read the headlines, you have no chance to, one, you're not going to be able to trade the news, but you're also up shit's creek, pardon my language, when something comes in contrary to your trade, right, to your position. And it's been happening non-stop. So it's one thing if you know someone's talking, like right now I put on these trades, these longs in NASDAQ. I know he's talking, so I've got to accept the consequences, right? Most of the time, you don't know someone's going to say something. That's when it really sucks, and you have no control over that. So what I also was talking about, Spot Damage has been talking about this nonstop, that we're an all-time low liquidity in the order book. Well, why do you think that is? Because the firms that provide the liquidity, they're getting blown out too on these headlines, and they don't want to be taking that risk, right? So it's just like we're getting blown out, they're getting blown out too. So that they pull their liquidity, so the markets are not only reacting to these headlines, they're moving exponentially because there's no orders in the order books to fill the orders, right? So it's been absolutely brutal. You know, again, I don't know what else to say except for complain every day. It's either you don't trade for the next 4 years, or you trade and then you just bitch all day, because that's basically all. That's all you can do, unless you can build algo headline reading algos. Then you just got to trade and hope you don't get a headline up your wazoo, I call it, which happens probably about 80% of the time to me. I can't even tell you the ridiculousness of the percentages that the trade has worked for me versus against me when a headline comes out. So regardless, I know the specimen is talking right now, and I put the trade on. I got to be okay with it. If he says something bearish, then I just got to be okay with it. So what I did here is I went long, bark, blind ATR retest, and we'll go over the structure stuff too. I covered that too while no one can hear me. What's great about this, so the way I trade these for my position trades, for any trades as far as I'm getting in, position trades mostly, but the stop, so I'll get in here, right? So I force the market, if I'm going to enter the trade, I force the market to move an ATR out of the event plus 15%. That helps me avoid the algo snapback. And again, we were talking about this trade too. This was a reversion trade that worked, the one ATR. So what you see on the chart here, I know it seems like there's a lot, but it's not complicated, right? It is a lot to look at, but it's not complicated. So these dashed lines, or these dotted lines, are the 1, the 2, and the 3 ATR, right? Or actually this is just in front of the ATR, the 1 and 2 ATR. The blue line is the actual ATR, but these markets have a propensity to come just in front of the ATR and snap back. That's why we have our entry there. And then the red dashed dotted lines, those are the stops. So here, if I entered this 1 ATR reversion trade where I'm getting in and getting out when it comes back to the zone, that was my stop for that trade. If I enter the 2, my stop's there, and the 3, the stop's up here, right? So we have trades that play. This is more of a scalp for those of you that just have to scalp and want to be in and out. This is the best method to scalp that I've seen in these markets. And the other one is price change algo on the market pulse. We'll cover that, especially today since nothing's happening. Well, the markets just sit here waiting for the next headline. So we have different trades that play for the return to this, and it's a great trade. And again, I just made the course on this. Let me put this document in too. So this is my document, everything I'm talking about here. There's the new courses. This one's the trading strategies course, right? So this is where I go over 16 different trading strategies, meaning my important areas that I look for SI events. And then the other one is the ATR reversion trade. So this is the trade where you're playing for the move back to the volume event, right? Beston is still talking. He talked for hours yesterday, so. But anyway, there are 2 different trades, so I make courses on them. So in case if you're watching these webinars, it's very hard to follow. This goes over everything. I can't go over the basics of every trade on live trading webinars because I'm trading live and I'm trading multiple markets. And then here's the zone drawing tool. That's the add-on. That is, again, this has been a godsend. Guy from my trade room, Yuan, brilliant guy, figured out a way to draw these events. And there's so much more to just the event being drawn from the subchart on here. It also has your position sizing. So again, if I'm taking position trades, you can plug in your risk level, right? So you can put your account size and what you want to risk. I'll just show you this here. Nothing is going on right now. Come over here, put in your capital, what you want to risk per trade. Again, I trade most of my strategies on these Apex accounts, so I'm trading bigger size. You don't want to be risking 10% of your real money on a trade. Most you should be risking is 2%. Per trade. We'll go over that too. But anyway, I'm risking $500 a trade. So the great thing about this zone drawing tool is, besides drawing the event on the on chart, it's telling you where to get in. So if I want to risk so I'm risking $500 per trade that I take, right? So if I'm taking position trades, if I get in here and I stop out here, that's what I demand to keep me from getting algoed out of the trade, because the algos are 90% of the trade most days. I could put on 4 micros, getting in here, getting out here. So for instance, this one, I got in here, my stop's down here, I put on 4. And then if you're doing the reversion trade, risking $500 per reversion, that's what this sizing is, right? So if I took this 1 ATR back to the zone, I did not, because it's, you can take them aggressively, meaning as the market moves into these reversions, you take them on these webinars, and mostly even when I'm sitting here by myself. I'm just too old to be sitting here watching every 1 ATR, because the whole idea is no matter what edge you're taking, you need to take every one that you see to let the probabilities play out, because market trading edge is nothing more than probabilities, right? It's just a higher expectation of one thing happening over another. That's all trading is. There's nothing 100%, not even close to it. Anyone tells you that, or tells you they're 80, some guy, the same jackass that was saying that the mentor Q levels, it doesn't make sense, and I don't even know if you guys heard that, but I'll get in that. He's like, well, which ones do you take? Some of them don't work, and then the others do. It's like, that's the point. You sit here, and some of them, these dealers are going to be reacting. They're always reacting, but sometimes there's bigger money coming in that blows through these levels. Even if the dealers are reacting, then it could blow right through. So that's why I demand, and actually I could take this too, which I'm going to. So this is a sexy GEXy here. This is a variation. So this is a great example, right? I am long, you can see here, I'm long Bark and Lick, and these are different accounts, right? So this is actually at a trading firm. I'm taking those trades. So I'm long Bark and Lick here, NASDAQ. Why do I have this? Oh yeah, this is from overnight. I was thinking I left orders in the order book like I was doing. This is overnight trade. We'll go over that when we get a chance. I've given back most of my profit on that. So there's my Bark and Lick. This was I put on that hot knife through butter. We'll go over that. One of the trading strategies where I went best in them stock and I got blown out of that. But this is my current Bark and Lick trade right here. Again, it's pretty much flat. So my point is I'm long those two, but then I just took a sexy GEXy short. What's a sexy GEXy? So it's one of the few auto trades, meaning auto fades, where I'm jumping right smack dab in the middle of the zone, right? So that's these blue auto fades, right? So TikTok's when you get in a volume event, opposing volume event with a tick extreme, NYS or NASDAQ tick extreme. So when this thing tags plus 1,000 or minus 1,000, I'll just jump smack dab in the middle of the zone. Hasn't happened today yet, right? So if it tagged that, I get an alert, and if I get an event, I just jump in right in the middle of the zone, plus 1,000, minus 1,000, or close to it anyway. And this is the NASDAQ tick. So that's one of the auto fade strategies. Sexy GEXys is what I took first time in NASDAQ when Besson was talking, and he's still talking, guys. So it's like I'm accepting the results, whatever happens in these trades, knowing if he says one thing counter to my trade, I'm screwed. Take any fade trade in the spot game of Mentor Q gamma level. Trade is taken immediately when the opposing SI event fires off. Market moving higher with the buy stops, that's what we just saw there, or into sell ice, or market moving lower with sell stop run, or into buy icebergs. Be wary of a trade if the rel vol is elevated 200% or more. This is the footprint information too. We'll look at that. But the point is, you don't want to be playing these dealer fades. Knowing the dealers are going to be here hedging. If you see heavy relative volume, because that's when the market likely is to blow through these areas because of because there's the dealers are still hedging, but there's bigger players. That's what the relative volume is showing you. So what I'm speaking of is this relative volume. I use it on a Sierra chart. I do not use Thinkorswim relative volume because it's just showing you the last 60 periods. I want to know, this is telling you for the last 30 days, so 100 is just normal. If it starts to tag over 200%, that's telling me that there's bigger money playing. To be careful, like fading at the GEX level, so on and so forth. So you can see overnight something went down here. Let's see, I thought I saw some, was it overnight? Yeah, so this was overnight. There was a lot of heavy relative volume, whatever. Well, that might have been yesterday. That's yesterday. But the point is, that's the relative volume I look for, and I don't take sexy GEXys if that thing's spiking. All right, so I took the sexy GEXy. This is a little bit of a variation, right? So the first one I took was exactly how I intended it when I came up with it, right? And we just, again, guys, we're adapting. You're always adapting to your trading, right? So back in the day when I was a huge scalper, I mean, I got knocked out of the business. Was making millions of dollars, and then overnight it disappeared. I couldn't make a dollar again, right? Because these computers, these algos took over. And I was one of the fastest clickers on the planet, but I was not as fast as an algo. Hold on 1 second here. I forgot what I was going to say. I lost my train of thought because I was turning on my fan. Anyway, hold on, let me see what this guy's saying. I completely lost my train of thought, guys, so it'll come back to me. Anyway, this is a variation of this trade, right? So the way I met this trade, what I was saying is you got to adapt your trading. So again, I didn't even look at the dealer information, the options information up for the first 20 years of my trading because I didn't think it was that important, and it wasn't that important as far as impact to the markets. These days, and if you've watched it, again, I'm going over a lot of the stuff I've already talked about, but you guys didn't hear me earlier. These days, Fabio, who I from Mentor Q, that's these levels, by the way, these Mentor Q levels. Again, guys, everything I talk about, you can get discounts to. They're in this. I never posted this. Hold on, let me post this here. So you get it there. You go to my website, and you can see all these things on here. Pulcinitrader.com. So these are the courses. This is the discount to the Bookmap software, basic software. Here's my Scott Stone's indicator. Again, if you remember my trade room, you get 20% off of that as well. You get a lot of discounts as a member of my trade room. But here's the gamma levels, right? I'm going to put another one. He's got a yearly one too. But anyways, Fabio from Mentor Q, we've done multiple webinars. We're doing another one next Tuesday. I'll send out an email. So go to the site and hit the contact and put in your info, and you'll get an email when I'll send out a link to that. It's going to be a public webinar. Anyway, these levels on the chart are the Mentor Q levels. The one over here are the spot gamma levels, right? So these are really, really important areas to know where these dealers are hedging. And what I was getting at is he's shown, when he does his webinars, he shows the explosion of he'll show like a bar graph of the explosion of options activity in these markets over the last 5 years. It's just insane, right? What does that mean? It means that there's it's the new game in town where they're playing with the 0 date to expiration. They're kind of manipulating it at times as well. But the point is, the dealers get loaded up with options, and they have to hedge that activity with the futures. So they're a big player in here. Are they the only player? No, but they are most days, most times. Like right now, when nothing's happening, it's options dealers reacting to the options flow and algos, right? So you want to know, one, where these GEX levels are, these gamma levels where dealers are going to be hedging, right? And you want to be watching the real-time options flow. This is through spot gamma. This is the hero, right? So right now, what I was showing earlier, again, I don't know what you guys heard, what you didn't, so I'm just being redundant on a lot of this stuff, but you can see this thing is moving exactly with the hero today because nothing is going on right now. So whatever way this moves, this blue line or purple line, it's the way the market's moving, right? So it's just literally following everything that the dealer does. That's what this does. That's what the market does, the futures, right? So it's like whatever this does, see how this is selling off right now? So is the market. So again, this trades just like a market. Obviously, a lot of times you can't predict what it's doing, but you do want to watch for notional moves, meaning Brentford Spot Gamma talks about a billion move or more. So you can see this has moved about a billion lower. The market's responded a little bit, not much. But the point is, what you want to pay attention to are flow alerts. So that's when huge options activity comes in. And the way it usually works here, and it didn't work on this time, so this time it happened, it didn't work. But most of it's just like anything else in trading, right? Any other edge, it doesn't work every time. But most of the time, whatever way this blue line, the options flow is moving, you get a flow alert. It means a big options order, and you can usually fade, right? So then once this levels out, the market usually turns around. Well, this one, it kind of just spun in place and moved higher. But we do have a trade for that. That's called the flow beat. But the point is, you want to pay attention to this stuff because they are big players in the market. Because they have to be. It's not they're not taking directional trades, but they have to hedge themselves. So you want to know when big orders are coming in. You want to know when it moves notionally. things like that. And you want to know where these levels are. So again, I am short a sexy GEXy here. And we got a couple other trades brewing here too. We can take reversion, A+ reversion trades. We can take reversion trades back here. So I'll get into that. But right now, the way I take these sexy GEXys, so this is a variation. I got off track. This is what I was trying to say in the beginning. So how I originally intended this is looking for an opposing volume event. So in this case, buy stops, which are usually retail trader pukes, which is not usually initiative buying, right? It's usually guys just puking, so you can expect a reversal. This actually didn't reverse. This turned into a stop and hold, where the bigger money stayed behind this and moved higher. Point is, I was looking for these right on the levels. Then I would jump in, auto entry trade, and then take the trade and get out of some, which we'll go over here. This is a variation where it doesn't have to be right on the GEX level. It could be in front, as long as it shows that it's reacting. So right here I saw it was reacting. I jumped in right here. This is a great risk-reward trade because I'm getting in here. Here's my stop, right? So what I'm looking for is a reaction, the dealer reaction. What's my dealer? And this is a trade in progress, right? This is just called adapting the markets. I've never even looked at this stuff. Now I'm taking trades off of it. As of right now, the way I'm trading this is the sexy GEXy trade. Like I said, I'm jumping in, at these GEX levels with a volume event, and then I'm looking for the dealer reaction, the initial dealer reaction out. So I'll get out of half of them. I got 8 on. I'll get out of half right in front of the ATR, the same price where I take the reversion back to the zone for that particular trade. I'll get out of half of my order there, right? And then I'll let the other half ride as a position trade because this is a volume event and that usually leads to bigger moves. So that's how I'm trading the sexy GEXy right now. So I already tried one here. Again, best in its talking. He obviously said something bullish. It got blown out. Put on again. Again, I'm accepting the consequences of knowing he's talking. Most of the time, you don't know the guys are going to talk, and it's even more brutal. But so I got a sexy GEXy on. So what other trades can I do off this? Again, there is nothing happening anywhere, guys, and I mean anywhere. So we're just concentrated on NASDAQ right now. I put on the Bark and Lick long. I still have those on, right? Again, blind ATR retest confirmed. The Lick is the same as the Bark, but I'm looking for heavy. I'll move to the heavy resting liquidity as my target. So like I can use this, see this heavy resting liquidity that's pretty much been in here all morning. This one here too, right? So I will hold my Bark trade. I get out in important areas as the market moves into them, like GEX levels, market profile composites. Well, let me find this document, my trading in the zone document. And I'll get to your questions if you got them. YouTube here in a second. I just gotta find this. So I usually go over this every webinar. Hold on, I'm trying to hurry up and get back here for all this activity that's going on. Just kidding. As this is how these markets trade. They literally just spin in place, waiting for the next headline, and then rip off the page. It's brutal. It's absolutely brutal, and that's what's happening right now. All right. So anyway. So the areas that I will get out at, so say it's NASDAQ, Bark, and Lick. Let's just say the Bark right now, right? I waited for the ATR retest confirm. So as the market moves into these important areas, I will piece out of some of my contracts, right? So meaning this is straight out of Trading in the Zone by Mark Douglas, right? I've added my own stuff, but this is what he says. I pay myself as the market makes money available to me. So I watch Ludwig levels to get out of some market. Then we'll go over each one of these since nothing's going on. Right, so Ludwig levels are the second most powerful thing that I've ever seen in my trading career. And by the way, before I get into these, this is a potential short as well, a slug and a pick, right? So what am I talking about? I'm talking about, first and foremost, we got the volume event. That's the core of my trading. Here's a stop run, right? As long as this doesn't prove bullish, by meaning getting an ATR out of here, there's shorts I can take off of this event. Position trading shorts. Right now, remember I said I'm looking for these volume events in important areas. Well, my important areas is a Ludwig level, the second most important thing I've ever seen in trading, bar none. Right? You can see it kind of bounced off that one too. It got close. Anyway, I already know these are really powerful, but did I put a trade on blindly? No, I need a volume event. Well, I got it. So there's a volume event here. If it proves bearish, I'm getting in a slug. Here's another important area, market profile composite. What's a composite? They're just days, the value area days merged together. Multiple single days merged together. What's the value area? That's where 70% of the trade occurred in those days, right, in the composite, or even like this was yesterday. This is the value area. I don't pay attention to the single day value areas as much because it's not as powerful. I do love when you merge the days. Like for instance, this one is, see how many days this is. That's a lot of days, right? So the more days are there, the more powerful it is. So all this is showing you is basically this in a different way, right? Very, very, very important. Especially what happens here. I keep saying that, right? So that's what that's showing you. All these days. Tried to break out yesterday, came back, threatened the high volume node, and held. So right now everything looks bullish. Then it built balance over the last day and a half and broke out of there. So everything still looks bullish here, right? If this fails and that fails, fail balance breakouts, watch out below, right? So, but right now everything looks bullish. So anyway, what I was showing you here are these are the days, and this is how I do it, right? If 50% of these market profile single days, if they overlap, 50% overlaps the prior day, then I merge them, right? So like this day was 50%, and pretty much exactly I would merge that, right? This day engulfed that day, I'd merge that. Now you got a 3 day, right? This day still 50%, merge that. This day 50% exactly, merge that. This day, 50% exactly, merge that. This day did not merge it. So this is like a 6 day market profile composite. Very important what happens here, right? So it's tried twice now. So this is yesterday's trade. So that we come up with, we were talking about thesis, meaning a guess. Whoops, I didn't want to do that. There we go. So you can come up with thesis based on how the market's reacting to these as well. Thesis is just a guess. Again, I can't remember if you guys heard what I was saying with the structure stuff. That's just a guess on what's going to happen, like the balance areas. And again, if I get the volume events in the direction of my guess, and I trade bigger, we'll go over that too. But let me. So this was yesterday. So this is still telling you something. This is still saying it's pretty bullish, right? Market tried to get in this guy yesterday. I get stopped out of this GEXy again, but I am long. Where is my? Did I not put my stop in here? I should have stopped out here. I forgot to put it in. That's not good. So I'm probably gonna get stopped out here. So again, I'm long bark and lick. This is the sexy GEXy. Just blew through there again. So again, I guarantee you, he just said something bullish. It's just sitting here waiting for the chirps. All right, so I stopped out of that GEXy again. So the GEXys have gotten run over twice here. But I am long bark and lick, right? And you can see it just blew through. We should be getting new lugs here too, and that's telling you something. So I am long bark and lick here, right? This is from last night. And I'm short gold here, by the way. I forgot about that trade. Hold on here. I think I put the stop in. I talked about this too when no one can hear me, but I'm short gold Izzy. We'll go over that trade when we get a chance. Anyway, I am long. I lost in the GEXys, but I'm long bark and lick. So the trades I was just talking about, those are done, right? How do I know that? Because this event proved bullish. It got the ATR out of here. So what I can do here now too, remember I took the bark and lick off of that guy? Well, if this does that, I can add to those. Brand new trade, right? With the stop there. I would move it below this prior event. And then off of this guy, do the same thing. So you can see on a trending day, you can get multiple positions on. Position, position, position. So you can have 3, 4, 5, 6 positions on in the direction of a trending move. And all I do is I trail the most recent event. So my stop for this bark and lick for this guy was down here when I put it on, right around 21,856. This came in, trailed the stop to that. I personally will not stop out in prior events. I try to move it below. This is subjective. You got to decide, okay, here's where I should be stopping out. Do I want to risk another 20 points and move it below there? I do. So I would have moved it right there. I didn't even put this in, well, because I've been talking, but that's where my stop would have been. Now we have a new event. Here's the stop for that. So now I'll stop out at a normal. I'm not going to move. My stop's supposed to be here. I'm not going to move it all the way down here. I'm not going to risk 50 more points. So if this comes back here now on the bark and lick, I am out of my longs. In the meantime, I could put on more off of this, keep my stop there, more off of this. So we'll see what happens here. Then, say this turns bearish. Well, there's certain shorts I could put on here. We'll look at that. And then, so I'll stop out of my longs and I'll go short potentially. So let's see what's going on here. Let me put these stops in before I forget, because I always do. Stop for these Bark and Lick longs, 21,918 quarter. I'll get to your questions here in a second if you got them. 918 quarter. Bark, Lick. All right, so that's working. So what's next here? So I'm always defaulting to the most recent event, trailing my stops, and then for newest trades. I can still, this is a variation, I can still take longs off of this guy, Bark and Lick longs, as long as the most recent doesn't prove bearish. And then I can still take longs off of this, obviously. So first and foremost, if this turns bearish, what can I do here? I'd be out of my longs, and let's see if this is an IZZY. Yeah, it's through the inflection zone. So IZZYs are, again, I draw these zones every morning for my trade room and for myself. They're just in the 4 important areas of trading: tops and bottoms of balance areas, high volume nodes of balance areas, directional conviction, and buying and selling tails. Those are the 4 areas where I'll draw, and a lot of stuff overlaps. So I'll draw these, and you'd be amazed on how these markets, like for instance, this gold trade that I'm short, I took an IZZY short here earlier as the market moved into this. Again, what happened over here? We had a gap down. Gaps are directional conviction. This is a regular trading hours chart, so it's just showing me while the market was open, not overnight stuff. I just like looking at it that way. You can have an overnight chart as well. There's nothing wrong with it. I just like it this view. Gap down, came back, look where it held, same area, put in a selling tail and directional conviction. So that wasn't really directional. I mean, it didn't move down, but I want to see like continuous bars. Like that's directional conviction, all right? That's directional conviction, but still, I mean, it still moved down pretty significantly from there and put a selling tail in. Same thing today. Came up there. I was watching. There was actually buy ice up here. Doesn't matter. The paper's not always right. This was this right here. I still put on the short. Felt terrible. Felt like the market was going to rip off. This event fired off. Proved bearish. I got short. I actually moved it just below there because that was a prior event, and I'm short IZZY. Then what I did is I trailed my stop to this most recent event. So I'm still short there, but the whole point is that was one of my important areas, my inflection zone, that I was willing to take a short if the volume event, which is the most important thing, failed. So it did, and I'm short. This is not an IZZY because the stop run happened through this zone. So nothing here. If it got up to this zone and I got a stop run and it failed, I would take an IZZY short. No IZZY short. Let's see what else we got. We got new lugs, first of all. That's telling you something. So you can come up through 3 different main ways I come up with thesis, right? One, my market structure that I was telling you guys. So today, again, this still looks very bullish as of right now, right? Balance. So I look at the structure. Again, structure is just traders loaded up. So for days, traders were placing bets. How did the shorts feel as it broke out? Not good. They got to puke them up. Longs feel great. Longs were saying, uh-oh, as it came back yesterday. It held the high volume node, HVN they call it, is just HVN, high volume node, it's just the middle of a balance area, right? It's where the most trade occurs in a balance area. It's just important because that's where traders are placing the most bets, right? Came back there yesterday, came back the first time the other day, held, put in a buying tail, said it's still bullish. Came back yesterday, looked over the abyss. This is during the Iran news, right? Shocking, there were some headlines yesterday. And then it put in a buying tail, built balance, and broke out of that. So this is all looks still very bullish. I could have taken double size in the Bark and Lick, and this is what I was talking about when no one can hear me. I didn't just because of the headlines, and if it overtakes this guy, this little smaller balance, then I would take double size longs. But I didn't take them off of here. And this was a potential breaking away trade right off of the bat too. Again, I know I talked about this when no one was listening. Where you break out of balance, but I didn't, and we got the volume event, right? But that's what I'm talking about here, this trading strategy. But I needed to see 200% or more relative volume, and that wasn't there, so I didn't take that trade, right? So that's this guy right here, breaking away. Break of a longer term balance area in an hourly chart. So that was today and yesterday's balance with high relative volume. That wasn't there. I had every other ingredient. I had was breaking out of balance. I had my volume event. That was this guy right off the bat, but I didn't take it because I didn't get the heavy relative volume. That was this dude, right? I could have. I need to see heavy relative volume. Why? Because it's such an obvious trade. Algos know what the retail traders are looking at. They love to snap the market back on those balance breakouts. So that's why I demand to see heavy relative volume. That means there's bigger money behind it, and I'm willing to take it. So I did not take the breaking away long here. All I took is the barking leg. All right, so in the meantime, what other important areas are you at for longs or shorts? So if this fails back out of here, I can take a pick short. Let's pick right here. Profiles and Courage, I named it. Pick. Named after John F. Kennedy's book. Again, these are supposed to be funny, memorable. That's why I name them the way I name them. Take any trade that moves into or out of a market profile composite. We've already talked about those, high or low. Trade can be taken if the market moves out of the composite and then back into the high or low. Market accepts in the composite. So I'll show you those examples. This is a little more subjective how you want to take this trade. Meaning, so here, market moved into this guy, right? There's your volume of it, basically right. It's basically right here. My entry's outside here, so I could take the pick. The bottom of this guy is basically 925-ish. So as long as my entry is below 925, I could take a pick short. And it is. It's at 919.50. It's pretty close, but I'll take it because I just can't pass up taking shorts in these markets. So again, my bark and lick, I'm trailing my stop to here, and then that's exactly where I take short. So I'll take a pick short if that comes back. That's a whole different trading strategy and account. So I'll put that in. It comes back there. And I can put on 3 based on the current ATR, size of the zone. This does everything for you. So I could put on 3, risking $500. So that comes back here. 920.25. It's pretty close to the bottom of that market profile, but I'm all right with it because I can't pass up on shorts. All right, so that's working. That's one of the areas. Technically I could have taken a sexy GEX here again, but I don't want to take a fade trade into these gamma levels if it blows through. That blew through. I was willing to take this one that I got stopped out on, but this one's still a stop run into that, but it's too much through. Like if it came up here and I got one, then I would take it there. But so I have the pick short working. There's no Izzy, and there's really nothing else like Ludwig levels. There's no slug or anything because we got new lugs. So the only short I can take right now based on my important areas is a pick short. What about longs? Well, long, I could take a pick too, and this is what I was getting at. There's patterns that you can take here. So I could take this aggressively, meaning, so you got the event right here, right? It broke into this market profile composite. I could take that pick aggressively, and I will do that because the market looks so bullish. So the other thing you can do if you want to demand ATR, retest, confirm, especially, well, actually what I'll do here, I will demand that because you do have these 2 gamma levels, right? So I don't want to enter right at the gamma level. First of all, I'd move it above. But for this one, I want to see ATR, retest, confirm. This is where it gets subjective. You got to decide for this pick, for pick long, that is. Remember, I'm already taking this pick short aggressive, but if it moves out into this one, do I want to take it first move out or wait for the ATR, retest, confirm? That's where you got to use your other factors, and I talk about this all the time, the scale, right? So when you're judging trades, like especially these events, whether you want to wait for the ATR retest like I'm talking about, this thing called the scale, right? So kind of weigh the different things that are going on. What's on the bullish side? We're breaking out of balance, current balance. It held that high volume node from yesterday. That's bullish. It just formed new lugs. That's bullish. It's breaking into the market profile composite. That's bullish. What's bearish? Not a lot. We've got uncertainty with the Iran stuff. It's not bearish, but you may have some problems getting through this call resistance, right? So it's like you got 4 to 2. You can say, okay, 4 to 2. The scale's leaning more on this side. All right, I'm taking this one aggressively. See what I'm saying? So guys, a lot of stuff's subjective. Most of the stuff I do is black and white, but there's things you have to make decisions on, like whether you want to enter this pick trade aggressively or wait for the retest. So the way these market profile composites usually react. So there's a bunch of different ways, but it'll either come up to it and fail, or if it accepts inside of it, many times it'll accept inside, come back, retest it, then go, right? The same when it breaks out. So many times, like say if it broke out of this guy, so many times it comes back, retest, and then go. So you have to decide whether you want to take, say there's a volume event right there. You got to decide whether you want to take it as it moves out, first move, or wait for the retest. That's where you want to use your scale to decide. But that's where it gets subjective, how you want to trade these pick trades. So technically, I should be taking this aggressively because there's so many things bullish. We got new lugs. It's breaking. It's accepting inside this. It's breaking out of the balance. So I'm going to change my mind here and take this pick aggressively if it moves. But I'm not going to get in right in front of these GEX levels. Why? Because I know these dealers react, and we're going to take actually a reversion trade if this happens. I'll go over that here in a second. But for the pick position trade, I'm going to put my entry should be here. I'm just going to move it above these GEX levels, and you see there's a spot gamma level. So I'm willing to risk more. But this is where it gets subjected to. Are you willing to risk another, basically 20 points to get in this trade? I will, because I don't want to get in as dealers are hedging. They have it snap back in my face the best I can. I don't know for sure, but so I'll get in at 750, pick long if it moves up there. So you see, I haven't done anything yet off of this event. It has to show its hand, meaning it has to get the ATR out of here to show me whether it's a bullish or bearish event. I only have three different strategies where I'll jump in right in the middle of the zone. That's just all from trial and error from watching millions of these things over the last 8 years. So again, that's why you're on their webinar, you're on my webinar, or if you're in my trade room, because you're trusting my judgment with my trading experience and watching so many of these. Does it mean after you get in there and you know what you're doing and you take 1,000 of these things that you're not going to see some tendencies? No, that's what I want from traders. I want traders to take what I'm teaching them and then expand on it and get better and come up with better ideas. I'm always open to new ideas. We talked about earlier about always being ready to adapt your trading, and doesn't mean I just add things on a daily basis. But if you came to me and said, Scott, I just noticed I took stats and every time it just broke just above the zone, and this situation, the market always led to this kind of move. I'll listen to that, but I'm just saying you guys are listening to my experience. Until you get 10,000 of these under your belt, I would probably listen to what I'm telling you is the best way to trade these. Again, as you get better at it and you start seeing stuff, be my guest to add your own stuff. I want you to add your own stuff, right? But I would not be doing it if you're a newer trader, and not even a new trader overall. I'm saying new to what I'm doing. Just follow my rules for the time being, get really good at my rules, and then you could adapt to it. All right, I gotta take a breath, but we'll go over this trade next. If it does do this, I could take a reversion back to this one, and I can take a reversion back to that one. That's a different trading strategy. Again, that's the bottom of this trading strategies document. That's more of a scalp, right? That's these trades here, reversion trade strategies. All right, let's see if you guys got any questions here. Can you repeat that? Yeah, I had to repeat basically a half hour of talking. That was not cool. Have to listen on Discord. At least Russell caught on to that. Scott is really good at blocking out the noise. I don't understand what that means. Was that a slight, or were you giving me props? Russell H. I don't know. First time streaming him, but it works on Discord. Yes. So you guys should hear me now. That was all before. I'm just going over this stuff. Good stuff happens. Thank you, Mark. Mark's one of the teachers pet in my trade room. All right, so here we go. So I'm about to get stopped out of the longs because I trailed my stop, right? So basically, I got in there. It's basically a scratch trade. I lose a little bit. I'm adjusting to the most recent event. What sucks is I got stopped out of this GEXy barely. It's usually to the tick, so I can't really bitch because it did move higher. But anyway, I'm going to put on the pick short. I'll stop out of my bark and licks that I have on, and I'll go pick short. Why? Because I'm adapting to something real time that happened in the market. I guarantee this move is something Besson is saying too. It's just a function of what's going on now. If you're going to trade while he's talking, you got to accept it. All right, so the other things I can take here are some reversion trades. This was almost an A+ reversion. So what are reversions? Reversions are taking trades as they move into these ATRs. This is the 1 ATR, this is the 2, this is the 3. It's actually just in front of the ATR because of the ridiculous propensity for these markets to come back to the zone. This was not an A+. An A+ is just because we already know these markets tag these ATRs and come back to the volume event. These always just do it almost every time, it feels like. It's even better when you know there's an area, a pocket of trap traders. When it comes back, they won out. So that's why it's called A+, but this entry was through that event. Doesn't mean it's not going to snap back to the zone, but it wasn't an A+ reversion. What I can do here, I'm going to take a back in black reversion though. So I just stopped out of my bark and lick long, and I went short pick. We just went over that trade. That was my entry. My stop for that trade, for that short, is up here. Again, I'm not going to stop out at these GEX levels. I'll move it up to the same place I was going to enter the long. The long is canceled too. Remember I was just talking about taking a pick long? Well, that's canceled. Why? Because it's just proved as a bearish event. Tag the ATR. That's how I judge. So that trade's canceled. Let me get that out of the order book. And I'm short pick. And you can see this was barely breaking back out of this thing. This is why I was a little hesitant to do it, but I still did it because I loved going short because I want these longs to get their asses handed to them every day that I trade. That was the event. The entry was just outside of this guy, this market profile composite. So I took a pick short. It's right on there. What else are we seeing here? Now things are turning around a little bit as far as thesis, right? So you can come up with a thesis with the lugs. When it builds new Ludwig levels, like short for lug. Actually, could I have taken a dad trade here too? No. I'm not even going to get into that until I see it. I don't want to confuse people. But anyway, when you build new lugs, Ludwig levels, if it's truly a bullish market, it should hold directional yellow. That's kind of the mean of the lugs, and prior red. If it does, then you expect the next red up. That's just a thesis of what should happen based on this. We were talking about these market profile composites. When they get in, what do you expect the other side? Same with lugs. If it can't hold, all right, we got some crude stuff too. If it can't hold directional yellow prior red, then you expect blue. Again, this is just thesis stuff based on how the lugs work, how they react, right? I don't just throw on trades because of it, but I use that as part of my scale. We just talked about that. All right, we got something in crude. Again, I don't know if this is done. I'm sure it's probably news. Yep, so here we go. This is it, guys. Something's being said somewhere. How do I know? Because, one, it's ripping. Doesn't mean just to rip it this news, but you can see here. See this heavy relative volume coming in out of nowhere. It's like nothing, and then 4 times normal. That's news, 100%. Right, so I will not take... Why is this not drawing, by the way? Why did I thought I heard crude. Why am I not seeing the stops? Oh, sell stops. But that wasn't threshold. That's really weird. Oh yeah, it was. So for some reason my crude zone is not drawing in here. I don't know what the issue is. I'm on their most recent, so that's not good. So they just did an update today. My crude zone did not draw. So what I have to do here is draw manually. So this on-drawing tool you can draw manually. I used to have to draw these things manually with this edit feature on here, and that was just it was horrific. So I'm going to draw this sell stop manually, and then I got to let my developer know it's not drawing in some of these products. So that was the sell stop, but this is a great example. Uh-oh. Hold on here. Getting issues with this thing. All right, it drew the see. Hey, what do you know? It's a news headline. Israel's considering reaction to Iran, whatever. So that's why crude's ripping. Guys, it's every market. This is what's going on. You just sit here and you just get run over by headlines. See. It's almost, and this is why equity are selling off, right? How do you predict that? You don't. So here we go. What are we? This is a great webinar to see exactly what's been going on. And not that if you're trading in these markets, you don't already know this, but this is what happens, right? This is why it's been so difficult the last 5 months. Market just spins, something said, rips. Spin, something said, rips. It's just like you can't, unless you're sitting next to the guy or you know what he's going to say, you're screwed. So I am short here, but it still pisses me off. It's just ridiculous. It's just ridiculous. Again, you can read headlines and you can make an algo that reads headline. Good job, you just caught this move, right? Otherwise, you're up shit's creek, pardon my language, if you're long. I'm not long, I'm short, and I'm still pissed just because it's just ridiculous. And you can see what I mean? This is why you don't want to be taking GEXys or anything else right now. You see this? This is heavy relative volume coming in the market. Almost got there in NASDAQ, definitely there in ES, and there in Russell. And you can hear the tick extreme. Remember we talked about tick extremes? So I could, if the event fired off, I could take a TikTok trade. So it hit the tick extreme in NASDAQ, but we didn't get an event in NASDAQ. So this is what I was talking about with the scale, right? I said everything looks bullish, but you have this uncertainty with Iran. 5 minutes later, here's an Iran headline, the markets get smushed, right? So it's see, Israel's considering taking action. It was 2 hours ago, and somehow the market's reacting now. All right, more importantly, enough of the bitching until the next headline. Algo guy's starting to pull. So, for my reversion trade, I wouldn't take him anyway because relative volume is heightened. You don't want to take him against relative volume because the big money is unloading here. 2, this thing's starting to cross right now. You don't want to be playing with reversion trades. We were talking about the reversion. I was considering taking that reversion back to the event. When this thing's crossing and heavy relative volume, do not mess with reversion trades. Why? Because the algos get run over, just like they're getting run over right now. They're trying to snap this thing back, right? But there's something bigger going on. So that's why that's happening. So I'm not going to take reversions back to the zone. Does that mean it won't come back here? No, but it's less likely because there's big money unloading in here. Let's see where we're at here. So it's still not there. So keep an eye on this going forward. Today. This is such an important what happens with this dude and that dude. If this comes back through the high volume node of that, which will be the high volume node of that, this market is very, very likely going to get destroyed. So I will, again, it's just a guess based on the structure, but if I get bearish events, I'm going to trade double size shorts. All right, so in the meantime, I am short here. This is an area that I can get out of. It's not much of a trade as far as profit I got in there. But you see, it's struggling at these GEX levels and this prior event. I got a little bit in it. It's not a bad idea to get out of one of these. I only got 3 on, but I'll get out of 1, right? So it's like, guys, I love 5 to 1, 5R on my trade and 3R on my trade, just like anybody else. Doesn't mean I ignore important areas if the market's struggling there. You can see this thing is struggling at this prior event. So remember we were talking about trading in the zone. These are areas where I will get out of some of my trade. It's not a great risk reward, but I can't control if the market's responding here. So if it's responding, then I got to get out of one right there. So what's that? We have a same day prior SI event, and we have mentor Q levels and spot gamma levels. So that's why I got out of one of there. So if it keeps going, great. I still short 2 of them. If it rips back, at least I got out of one at these areas. So again, I don't ignore these areas. If it would have just ripped straight through here and been down here, then I don't have to get out, right? But it's struggling here. The other thing I use, I don't have up, is Tick Strike. It's like an audio that kind of alerts me to what's going on too. What is that? I have an alert somewhere and I can't find where it is. That's this dude. All right, so I got out of 1. If this keeps going, great. And then there's other trades I could put on too. So if this comes back here, I can put on Bark and Licks, short, because that guy's pulling. Other than that, I'm not putting on reversions right now with the, even though the heavy relative volume wasn't really hitting NASDAQ per se. Yeah, it did right there, right? So I'm not putting on reversion trades with big money unloading here. So, but anyway, like I was saying, this is going to get very interesting as this day goes on. And I was wanting this to happen yesterday. I was hoping, because I always want the markets to get killed, because it's just nonsensical on the up moves all the time, in my opinion. So, if I can find the damn chart here. Hold on. Good old Thinkorswim. Hey, here it is. It should be right where I had it. Of course, it disappears. Anyway, keep an eye out for this too. Both of these markets look exactly the same. Balance from yesterday and today. Tried to break out. We already got a selling tail. That's not bullish. Instant rejection. Granted, the hour's not over with yet, but if this fills in, that's instant rejection. That's what a tail is. Then this dude, the even bigger guy, over like a week worth of balance, right? So you got that balance. You got that balance. If this gets, I say line in the sands, 21,800. Any events I get below there? Actually, I would go a little. I would say any events below this, right? Because that's the current high volume node of that guy where this directional conviction started. Any events below there, and Trump's talking too, by the way. Shocker. I'm going to take fail balance breakouts. Those are the best position trades in trading, in my opinion. That's this. Failed balance, breakdown, and breakout. Fail break of longer term balance when the market travels back through the balance area, high volume node. We already covered that. Trades are taken aggressively in the first SI event through the high volume node. Not only will I take that, I will take it double size, and I will take any corresponding shorts double size too. So, this reversion might work. I just didn't take it because I'm not taking it with heavy relative volume. But this is what happens. So this is a great back and black example. Barring the news stuff, this is what I look for, right? You can take these aggressive ATRs. You would have been stopped out of the one if you took it aggressive as it moves into the ATRs. But again, that was a news story. But what you can do, which is a more secure trade, if there is such a thing, is because the dealers are going to be reacting here, so you already know you got that, and you had a prior event here too. It's not an A+ because it's not the prior event. It's a few events ago, but there's still traders in there that are hoping it comes back so they can get the hell out that were wrong. So you got the dealer reaction, you got a prior event, wait for it to bounce, and then take the corresponding ATRs coming back. Again, I'm not taking this one just because of the news stuff coming out, but then again, there's a news story every 3 minutes, so... But there's heavy relative volume in this where traders just get run over. I don't want to hope it comes back here, so I'm not taking reversions off this guy. But that's the trade, and it's probably going to do it because it does it probably 85% of the time. And of course, I screwed up because I was watching NASDAQ. I was short gold here, and I could have got out. You see right there. So this is my error. See how it struggled at this GEX level? I should have been out of some more. Instead, now it's 100 ticks higher. So that's an F on my part. It's upsetting. Alright, so that sucks. So I have my stop in if it comes back, but I had a chance to get out some more of those gold shorts that we went over, and I just missed it. Again, that was during the headline stuff. Alright, what else do we got? I didn't do anything in Crude. That's headline driven too right now, but it doesn't mean I won't trade headlines. I'll trade position trades with headlines. I just don't want to take reversion trades. So this, I would have potentially taken an A+ reversion here. I'm okay taking reversions back into the heavy relative volume, meaning, see this relative volume right here. Right, so the market ripped. This is Crude. It ripped higher. So I'm okay taking reversions if the event's here because all these traders that just got run over, as it comes back, they want out. I'm okay taking those reversions. I don't want to take reversions. Say you had the event here with the heavy relative volume as it ripped. I don't want to hope it comes back to the event when I know traders just got run over. But as it moves back, and you could probably see this on the footprint too. Let's see what this looks like. Again, guys, I tried for years to trade off the footprint. You can use it to judge like heavy areas like this stuff, right? Like this isn't even that heavy, but I say 5,000 or more in Crude's heavy, and I have it on a 10 tick reversal, meaning it won't draw a new bar until it reverses 10 ticks, right? So anyway, that's important to know. Like when there's a ton of volume, so say the event was right here, right, with heavy relative volume, or say this is 5,000 or more. I don't want to take reversions coming back to that because I know guys just got run over. I'll take another A+ type of reversion is when you get events like this and then you get the reversions back into the heavy bar. Those are great because those traders just got run over, want out as it comes back. So I should be taking this reversion actually. I missed it. So I wanted to look and see what that looked like. So this is an A+ reversion. Event. Yeah, the one would have been stop, but you could put on the two. The two's right here in the middle. Stop's down here, and it's coming right back to the damn zone, and I missed it. So I'm not too mad because I would have lost on the one, but I would have put the two on, definitely. That's where I was just eyeballing right here, and by the time I came back, the thing already moved 40 ticks away. So here you go, guys. This is an A+ reversion. Oh my god, I gotta find out where this alert is coming from before I lose my mind. Bookmap needs to come up with a better way to. So I put these audio alerts in here when the market tags a certain price, and I did it like yesterday. I can't find what market I did it at. Hold on, was it YM maybe? You can hear that little chime in the background, right? Like that's what that is. Hold on. I don't know where that's coming from. It's really annoying though. Oh, there it is right there. That's what it is. It keeps tagging that. All right, that's gone. Don't have to listen to that anymore. All right. So all I have on right now is basically pick short. I'm still short Dow from overnight. I got it at half. I still have those on. I didn't get stopped out of those yet. And then I'm short gold, and I missed my exit on some of them. So again, guys, see what this is doing now. So we got the headline, did nothing, did nothing, did nothing, did nothing. Headline rips. Then now it'll spin, 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 spin. Next headline rip, spin, 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 spin. Next headline rip. That's just the way it's been. It's absolutely brutal. Let's see if you guys got any other questions here. Raul, hello, I'm from India. I lost 2.5 LAC in trading. What's LAC? LA Clippers? I'm assuming that's currency. But if you're looking for an edge, Raul, you're in the right place. I don't know what you've been trading off of, but obviously it doesn't sound like it's working too well and that's usually the case for 95% of traders. All right, in the meantime, let's see if I can put on some, this event in Crude was bearish. Oh, we're way over the time, by the way. Sorry. Trump's talking too, by the way. All right, guys, we're past the time. I'll just quickly go over if this is an area I can go short. I already missed the entry, but it came back. This was an Izzy, right? You saw one earlier where I took in gold. Well, it was not. So that was the buy ice event that broke. So I could take an Izzy short and see what else we got. Again, I'll take position trades with heavy relative volume. I just don't want to take reversion trades. No lugs. I don't have a current pick here. Let's see. This was a composite, so I can draw that. See if we're at the bottom of this guy. Yeah, pretty close. I wouldn't take a pick off of this, but a move into that, and if failed, I could take a pick. So the only thing I can do right now is an Izzy short in Crude. Again, this is the thing. It's like, the headlines are bullish, market's ripping, but the most recent event turned bearish. So if that comes back, I will enter this pick or this Izzy trade short. Again, I try not to enter in prior events, so I would put it below there, but I'll take an Izzy short here. Other than that, I missed the A+ reversion. That's coming back, the 2 ATR reversion, that is. All right, guys, sorry I talked a half hour. That's why the time went by so fast, because I talked for a half hour and no one could hear what I was saying unless you're in Discord, so I apologize for that. Again, going forward today, though, watch these areas. If they break, I am going to be firing on the short side based on structure, right? So we said, I say anything below 21,820, I'm taking FBBs. I'm taking any shorts double size. And then anywhere below an ES, again, same exact look, right? Little smaller balance here. I'd say anything below 60.20, adios. So keep an eye on that. It's just my guess. Again, my thesis is a guess. If I get volume events that are bearish, I am going to be trading double size. When volume events match my thesis, I trade bigger. All right, sorry for the technical difficulties as usual. It would have been nice if Mr. Dan from Bookmap could have let me know, but he's obviously not on there either. So, all right, guys, have a great week, and I'll be here. I do this every day in my trade room. Otherwise, I'll see you next Thursday. Thanks.